Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of September the 5th, 2011. Now, to get started with our presentation this week, we're going to begin where we always do with the US dollar index. This is a driving factor in commodities, equities, currencies, plays a very big role in things and how the trading month is setting up. Now, the non-farm payroll report that we received on Friday was pretty horrible, to say the least. So what we're looking at here is equity sell-off likely. Dollar benefits regardless of that number. Whether if it's a bad number, then it still has a safe haven flow attached to it. If it's a good number, the economy is improving. So you can see that the dollar for basically a week or two is going to benefit either way. So looking closer at this, you can see that I have this line drawn right across here. Now, when we look closer at this and we back it out a little bit for the last 6 months, we can see that the dollar has not made lower lows, but it has made higher highs. We have a significant amount of support dating back to the latter part of May at this 73.50 level. Currently, with the dollar index, we have what appears to be a buy signal. I would fully support this and would recommend buying dollars for the coming week. Specifically, when we see this support unable to be breached at this level, and now the vantage point indicators are beginning to turn over long. So when we look at these crossovers, we can see here the short-term crossover from vantage point is crossed to the upside. Our medium-term crossover is also crossing to the upside, as is our long-term crossover. So everything looks like the dollar is getting ready for a bigger move here. Our predicted true strength indicator and our predicted MACD are fully supportive. So we have all three of these indicators in complete agreement that the dollar is going to gain strength here. Our predicted short, medium, and long-term differences also fully supportive. So essentially when these types of indicators all line up and they all agree, there is, in my opinion, at least an 85% chance the dollar is going to continue to gain strength. Now, looking at things, our close for the week is at 74.83. Again, that's above all three of the vantage point predicted moving average. Now, in this particular case, we can see with the close of 74.83, our 3-day comes in at 74.56. 74.31 and 74.30. So we have a considerable amount of support building down there, getting ready for this bigger move to the upside. Now, I'm not sure how long this is going to last. It could last for a week. It could last for 4 months. It's difficult to say at this point, but this is a very clear buy signal in the dollar. So this will lead into this presentation as to what's going to happen with these other markets. Now, looking at the Swiss franc currency futures, to be perfectly honest, I do not like this trade. It still has a safe haven status attached to it for some reason, in my opinion, from a fundamental standpoint. Again, the Swiss franc is not a reserve currency. It has no bond market, no real position in global trade, but the market feels that there's a safety net there. I don't think that there is, and I think that the Swiss National Bank is going to take very aggressive steps to curb any further strength in this particular currency. So when things like this are happening, I tend to stay away from that particular currency because it's too erratic. That's basically, it's not trending. It's not channeling. There's fundamentals at play that don't support the price of the currency, so it's better to stand aside. Japanese yen currency futures basically showing the very same thing. We have a grouping of currencies here, and this is what I tell my own clients that I work with on a daily basis, that the grouping is the dollar, the Swiss franc, and the yen. This is one group of currencies, and then you have all the other ones. So right now, these three currencies are likely to retain a bid for at least the near term. Now, again, looking at gold, which way is gold going to follow if the dollar strengthens? Just because the dollar strengthens does not mean that gold will necessarily sell off. Just to point this out, when we're looking at global uncertainty, clearly we're staring down the barrel of another recession here. What we would anticipate is that gold would continue to appreciate. So I think we're set for a pretty substantial move, corrective move, before we get that next leg up on gold. And I think the dollar may overpower gold a little bit just in the short term, because the dollar's obviously going to go on a real tear here, in my respectful opinion. So we'll see how this one plays out, but the gold is going to be a very, very choppy trade next week. Now, looking at light sweet crude oil, we can see that we tried to produce a more medium to longer term buy signal on light sweet crude oil. We can see now that it's turning back down to the downside. Predicted short, medium, and long-term differences also turning back. What I want to point out here to everybody is when you put it up, the oil trade against the S&P 500, it is exactly the same trade. And again, this is something I work with my clients on a daily basis to understand that this is not two different trades here. Equities down, oil down. Oil up, equities up. That is the trade here. This to me looks like, again, with that dollar strength and the gold strength, equities and crude oil will move, are very likely to move substantially lower, particularly as fear comes back into the market. Now, September is predominantly a very good month for the equity markets. I don't think that this September is going to be a very good month for the equity markets personally, because again, when you're looking at these types of recession fears, no job growth, that's not indicative of a strong equity market. It's indicative of a strong bond market, but not an equity market. So while we've had another scenario this past week with equities rallying from Tuesday to Friday, it's just another classic case, in my opinion, of buying the rumor and selling the fact. Every month prior to non-farm payrolls, the equities rally, and every month after the non-farm payrolls, equities sell off. This is a very clear pattern. You can see it in the Vantage Point software. At the end of the month, the beginning of the month, the equities, they tank. So in short, the likelihood is the S&P 500 and the Dow and the global equity markets are going to move substantially lower next week. Looking at the 10-year notes, you can see that they're stabilizing and they're pushing higher. I believe that the 10-year notes and the US dollar can rally together here. And then likely the dollar is probably going to take a back seat and sell off somewhat again, but I don't think that's going to be next week. Now, going into some of our currency pairs here, well, we'll take one quick look at the Canadian dollar futures. Canadian dollar futures, again, trying to rally this past week. My own clients, I've recommended a standing buy signal on US Canada every day last week is the recommendation I made, because Canada, while they are getting more involved in global trade with India and China and other countries like that, they're still 80% tied to the US. The US goes into recession, Canada goes into a recession. I don't like to complicate things. I like to keep it in my own trading and with my clients. I like to keep it very, very simple. And that's as simple as I can say it. If the US goes down, Canada goes down with it. So you can see that as the